So your views on the indices, the financials showing some significant recovery, not quite so on the composite.
Yeah, the financial stocks showed a good performance last week. We had stocks like UT Bank, like Standard Chartered Bank, all performing well. This is mainly because the financial stocks has been heavily hit this year towards the second half of the year, and I believe that investors are finding some the stocks are trading in line with fundamentals now, so it's looking more and more attractive. So it was the main sector that pushed the market up by 0.32% last week.
All right, so as the GSE overcomes risk aversion, 8 stocks in the last week have seen price movements. Which has been the most significant?
The most significant was Bob, that's Benso Oil Palm Plantation, an agribusiness, in a local agribusiness. It's majorly owned by Wilmar International. What caused Bob to rise was mainly because Bob's third quarter financials was very impressive, but investors took a very long time in reacting to this because most of the stock is being held largely by Wilmar, so it doesn't trade often. But over the last couple of weeks, there's been a lot of activity in Bob, and there seems to be significant demand. This is because profits in the third quarter of this year rose by an overwhelming 297%, backed by revenue, a jump of 102% in revenue. So these were the main supporting fundamentals that investors were looking at in Bob.
All right, so on the opposite end, Works has broken through the lethargy where the stock wasn't really trading at anything, and this time declining 7%. What's happened here?
The problem with Works is that at the beginning of the year, there was a recommissioning of Valco. Valco happens to be the major raw material supplier to Works. It produces aluminium sheets for Works to use. So a lot of people, a lot of investors were beginning to hope that it's going to be a turnaround for Works. Unfortunately, over the years, over the half year, Works has failed to impress investors. Its third quarter financial performance is still lurking in losses. So investors are beginning to cash out from the stock. That notwithstanding, Works is part of the only stocks that have posted a positive year-to-date till now. So even though there seems to be some profit taking in the stock is still significantly above its year open price.
We've seen profit taking at SIC Insurance, that stock trading at a discount of 14%. So effectively, investors find it attractive. Why is that?
SIC has been dipping over the last couple of weeks, mainly because there's been this kind of rumor on the market that after the Accra floods somewhere about almost 2 months ago, a lot of insurance companies have been hard hit. The speculation is that there's going to be a lot of claim payments for insurance companies, mainly SIC and then Enterprise Group Limited. So a lot of investors have been selling out, and this has been the cause for the declining stocks of insurance companies. But the opportunity that exists for SIC is that at 39 pesos, at the price at which it's priced now, it's trading almost 35% below its sector average PE. The profits of the third quarter for SIC was also significantly up by about 56%. So all in all, if you're looking at fundamentals in respect to the current price on the market, SIC has a lot of opportunities. Per our own valuations, we post SIC around 55 pesos per share as a fair value of SIC. This gives SIC over about 60% upward adjustment if investors begin to react to fundamentals.